Economic optimism helps lift the market. Without a banking crisis to worry about, we're back to the same trading range as before and in a similar news cycle. We're back to wondering how the market will react to the upcoming CPI report on Wednesday. The future weeks in the market will be moved by earnings and the notion that the market expects to see the Fed pivot from their rate hikes. I expect we may see a last push higher, but will retreat after the Fed doesn't immediately start cutting rates. The market will act surprised by the news and we will retreat from elevated levels. Here's a weekly chart of the Dow Jones Index and you can see that outside of the few weeks of a banking crisis, the index has been trading sideways since November of last year. It's been a tight trading range, but we recently crossed above the purple support line. I expect that unless earnings come out strong, a week or two later we hit resistance at the orange line and come right back down. If we zoom into the daily chart, we can see this pattern a little more clearly. The last 5 trading days have been stuck between 33,265 and 33,625. The last 2 times we crossed the purple support line, we traded flat for a couple of days and eventually broke out higher until we hit the orange resistance line. Then right around the corner, we get some of the bigger, bank names coming out with earnings. JP Morgan, JPM, Citigroup, C, and PNC Financial, PNC, take center stage on Friday and we should hear more about the health of the financial sector and projections for the next quarter. Add to the backdrop of yet another impending rate hike, and we should have some volatility coming back into the market. The volatility index, VIX, is already near 52-week lows, which could be bearish for the market if volatility creeps up from here. As option sellers though, we need a little volatility back in our lives though. Today's trade ideas are in the specialty retail industry. For more information on the trade idea and this visit tradersreserve.com.